Hello guys, in this video I'm going to explain to you which is better to invest your money either in ETF or a mutual fund. And also remember my friend, this video is only for educational purpose only, it's not for a recommendation video as such. And also I have explained, or I have make a video on ETF. What are those ETF which give a good return to the investor in the last 1 year? And if you really want to watch this video, okay, and also I would say that go and watch it because it gives you some knowledge about it. Okay, go and watch it. I'll give here the link on top because it is a very important if you want to invest in the ETF. However, in this particular video, I will be focuses what are the differences between this ETF and a mutual fund. There only after that I will give my opinion. Okay, either we should invest in ETF or a mutual fund, or you can take your own decision. Okay, and all this which I am going to explain to you here is based on my opinion. Now, if you look on the screen, okay, the first point we have is the definition itself. The ETF, okay, it is used mostly only to track the index of a particular sector. Now, for example, let us say the financial sector, okay, it is tracked by a bank base, okay, or Nifty base, okay, which is for Nifty 50. And also, if you look back into the IT sector, okay, it is tracked again by IT base and many other as such. However, in a mutual fund, okay, there is nothing as such. Okay, in a mutual fund, there is an investment program, okay, funded by the investors like you and me, okay, and give it to a manager to invest in the stock market on our behalf. Now, to give you one example, okay, let us take one example for the first one, that is the ETF. For example, I am already experienced traders and experienced investor. Okay, I would go directly invest in them equity itself in the individual stock. However, if we want to diversify our fund, okay, our portfolio, we would invest directly on the ETF itself. For example, I can give here is like a small cap, then mid cap, then we have the IT base, then we have the Nifty mid cap 150 base, and so on and so forth. Okay, and I have make a video also on this ETF, okay, which is the most giving return to the investor in last 1 year. If you really want to watch that one, okay, I have give the link here in the description as well. Go and watch it. Now, for example, again, I'll give you here again about this ETF. If you are already a traders, for example, okay, you already have that experience, so you will go directly to invest in this ETF. Whereas in the mutual fund, okay, you are a new traders, you are a new investors, you do not know where to go and invest your money, because once you go to invest your money, maybe in individual stock or maybe in any kind of stock, maybe in a commodities, you are afraid again you will lose your money. However, to avoid all those, you have decided to go to or to hire this manager, a professional. So the best thing you can do is you have to go through the mutual fund. Now, the other example for this, okay, suppose you are a new driver, okay, you don't know how to drive a vehicle properly, especially in the city, maybe in the road. So what you need to do is you hire someone to drive for you when you go to somewhere, maybe to Guwahati, maybe to Kolkata, maybe to Hyderabad or whatever. So the example of this, I can give you that one, because you hire someone on your behalf to invest your money in the stock market or to drive your vehicle when you go to somewhere else. This is the basic example I can give you so that you will understand about this mutual fund. Now, when we talk about this management fees, okay, it is very different from this mutual fund, okay, which we are going to discuss here. If you look here on the screen, okay, while comparing a mutual fund and ETF, most ETF have lesser management fees than the mutual fund that are actively managed. The lowest fee, okay, of this ETF is mostly from a range, okay, from 0.03% to 1% only. That means it does not cross more than 1%. That is a very low fees, okay. However, if you look back to this okay, mutual funds, okay, look here, the management fee is as low as 0.10% to more than 2%. Sometimes it may go to 3%. However, not only that, okay, you have to pay for this seal load, then redemption fee, then exchange fee, account fee, and purchase fee. So overall, we can say that this mutual fund fee is very high when we compare with the ETF. This is one of the demerits of this mutual fund, because the fee structure is very high, whereas the merits here is that okay, in the ETF here is that the fee is very low. Now investment approach, okay, which is the third point. If you look here, okay, the ETF operates on an passive management approach, okay. It is not actively doing every day. Of course, some traders, some investors, okay, they even do that trading in the ETF. There is nothing wrong with that. However, okay, in most cases, most people are investing in ETF because they are always keep on trending, because there is a collection of stock, okay, or it is they used to track only for a particular sector. For example, like this Nifty 50, it used to track, okay, not Nifty 50, this Nifty Biz, it used to track only the Nifty 50 index. So it is mostly invest in this ETF. However, okay, this ETF, okay, in ETF it is mostly done by individual like you and me. Those are already experienced in the stock market. Even though you are not experienced, okay, even as I have said again, this is not a recommendation video. You can always invest in this ETF. However, kindly do your homework, and at the same time kindly have your own financial advisor, because okay, investment in the stock market, maybe in ETF or mutual fund, is quite risky, okay, because at any time you may lose your money, and at the same time you can become a hero or a zero as well, okay. Now when we look to the mutual fund, okay, mutual funds use an active management strategy by fund manager, okay. Now what happened in a mutual fund, most of the fund which you give to the manager, okay, for any securities, for doing trading on your behalf or your investing, okay. So what they need to do is they use for this active management strategy, means they will use it for trading, and also sometimes they will use it for swing trading, sometimes they will use it for position trading, sometimes they will use it for investing. This is depends on their okay, it depends on the fund manager to take any kind of decision. However, whereas in ETF, you as I have said, it's everything is done by you. The fund manager has nothing to do with this, okay. Whereas the taxation, okay, as you see here in the point number 2, okay, the fees again here also, okay. The capital gain tax on ETF is very low again when we compare with the mutual funds, because mutual fund also, it depends from one funds to the other. Some fund is very tax very high, some are very low. However, if we compare both these two, both the ETF and the mutual funds, we find that the ETF has less fees or taxation when we compare with the mutual funds, because in mutual funds, when we go back to point number 2, okay, the management fees, you have to pay that one more than 0.10%, okay. Then we have to pay that exchange fee, that redemption fee, then account fee, and the purchase fee. And besides that also, if you hold if the manager hold for a short term, you have to pay for it. If he holds that stock for a long term also, he have to pay it accordingly. According to new taxation rules, okay, as it was said by our finance minister, okay, if share is invest in the stock market for more than one year, then only 12.5% that we have to pay tax. Whereas if it is only for a short-term gain, then or maybe less than 1 year, then we have to pay more than 20%. I mean, not more than means 20%. That is a very high. The same thing apply here in the taxation as well. If you invest in ETF and it goes more than let us say 1 year, then you have to pay a fee only taxation only 20%. Whereas in a mutual fund as well the same. And also if it is in a short term, okay, less than 1 year, then you have to pay again. I have said again, okay, I have already said if 1 year already you have to pay 20%. But if it is more than 1 year, then only 12.5% you have to pay in both in the mutual fund and the taxation. However, in a mutual fund there are different kinds of taxation here, such as include the capital gain, okay, then the dividend and the holding as well. This holding means it depends how long the manager is holding the stock, and that it's short or long. Then accordingly you have to pay the tax, which is already okay, which is already given by our finance minister on the last budget. All this taxation there, okay, as I have said, is different from one funds to the other in case of the mutual fund. However, in ETF they are the same only. Now diversification. Okay, now if as I have said to you, okay, this ETF is mostly we invest in this ETF is only to diverse investment from other individual stock. For example, let us say I put in a HDFC Bank. Okay, I want to diversify my portfolio, so I want to diverse it to ETF, so that it is because it is more safe, because it is a collection of stock in of a particular sector. Whereas this mutual fund, again, okay, if we want to diversify, so it's okay, that is not a big issue. However, in most cases, okay, what happened, this mutual fund represent investor with extensive diversification option and exposure to a broader range of securities. Okay, because they are more they are more expert, they are professional, so they can diversify your money in investing either in a bonds market or in a stock market, okay, such as individual stocks or maybe in bonds, and even in financial instruments, maybe in REIT as well. And this depends only by the decision taken by the fund manager. Whereas the risk, okay, when we look at the risk in general, okay, especially in ETF, less risk because of index or passive tracking. Okay, because why is less risk? Because this index is used to track only for a particular sector, and one sector it includes many stocks. For example, like a financial sector, it has more than 200, 500, not, I don't know exactly, okay, but it has more than 50 stocks. Definitely not all the stock will fall down, not all the stock will performing well, but in the long run this ETF is always give a good return, is always appreciation in its asset. Whereas in this mutual fund, okay, may entail an increased risk. Why? Because this is done by a fund manager, which is sometimes which is not on they will not invest your money on a certain sector like ETF. However, they will invest it in an individual stock, okay, maybe in bonds market or whatever. It depends on the fund manager to take a decision accordingly. Whereas the last one, okay, the investment decision. Okay, here, as I have told you, is in ETF you are taking their own decision, whereas in the mutual funds it is the decision is taken by the by the manager, okay, the fund manager itself. So we do not know, okay, which is a good one for you right here. I would share my opinion on this. For me personally, I would prefer to go for ETF. Why? Because okay, to invest in ETF, remember this, please don't go and invest it because I say this, because this is based on my opinion and also based on my preference, based on my personality. Okay, why I follow in ETF? Because of one thing, because of the taxation, and the other is the management fees, and the other is because ETF is a diverse market. It is used to track all the particular sector, maybe like IT sector. All the IT sector it will track. If it is in finance, it will track all the financial instruments. So the risk is very less. So the best thing is that I choose ETF. And remember, my friend, which I am showing here also, okay, this which, even though I tell you that I would prefer ETF, remember that you should not go and invest there, because there is a high chance that ETF also may not performing well. But if you look back to the record in every ETF, okay, in the last 5 years, is always give a positive return. So it depends on you to take decisions, either you invest in the ETF or mutual funds. So the decision is yours. Okay, so thank you so much, friend. I hope this video have give you lots of benefit, and if you really want to know again in detail about stock market, I would recommend, okay, to watch my other videos also, so that you too will gain a lot from this video. And every week I'll give you this weekly swing trading for a week, okay, where I used to track, okay, where I used to see which kind of stock is good to invest, okay, not to invest, to do trading. However, again, remember, even though I am doing all this weekly swing trading, okay, when I used to analyze stock, remember that also is not for a recommendation, because you may lose your money, because not all the stock which I'm going to show also is performing well. So the best thing is that you do your homework, you do your own work, and take this video and every video of mine only for educational purpose only. So thank you so much. See you in the next video.